Hello everyone, welcome back to Finance Book YouTube channel. Today we are going to discuss on how to save income tax in India. Proper tax planning is often overlooked by many of us. We are so busy working and spending our monthly salaries, and tax planning only comes to our mind when we need to submit our proofs end of the financial year. This is common scenario for many people, and it was the same for me a few years back. However, dedicating some time to understand tax planning can significantly reduce the amount of tax you need to pay. So let's explore the best tips and strategies to help you save more on tax this year. Before we dive into specifics, I want to share a small story about my friend Rohan. Last year, Rohan was overwhelmed by the tax he had to pay. He felt like no matter how much he earned, a significant chunk always went to taxes. Determined to change this, Rohan decided to get smart about his tax planning. Started researching and implementing various tax saving strategies. By the end of financial year, not only he had saved a substantial amount of tax, but he also managed to invest wisely for his future. The first part of story moreover feel like many of us, right? Many of us in the same situation. Inspired by Rohan's success, I decided to share these valuable tips to all of us so that everyone will be fall under the second part of the story. So let's begin by exploring what you will be learned by the end of this video. In this video, we are going to cover the comparison between old regime and also new regimes. Also, we're going to discuss about various tax reductions and also exemptions we can consider. Also, we are going to discuss more on some of the effective tax saving investments we can do. Also, we are going to discuss on what are the additional tax benefits we can get for a salary individuals. Also, at the end, we will close the video by discussing some of the advanced saving strategies in respect to the tax. So let's begin by understanding old tax regime. The old tax regime allows for various deductions and exemptions, which we'll be discussing further in the video. These deductions can significantly lower your tax income. However, it comes with high tax rates. Whereas the new tax regime offers lower tax rates but removes most of the deductions and exemptions. For the instance, under the tax of old regime, you can claim deductions like Section 80C, 80D, 24B. Don't worry about these. In the video, we're going to discuss much depth of these sections and where we can leverage. Okay, these all we can leverage in the old tax regime. Whereas in new tax regime, these kind of benefits we cannot get. Just to simplify it, right? We have created a small comparison. So let's come to tax rate. In the old regime, we have a high rates and more deductions. Whereas in the new tax regime, lower rates and only few deductions can be considered. Coming to deductions, we have 80C, 80D in old tax regime. Also, we have few more too. Whereas in new tax regime, we have standard deduction of 75,000. Previously, it used to 50,000, but after recent budget, it was moved to 75,000. Coming to exemptions in old tax regime, we can leverage HRA, LTA, and other tax regimes. Also, we can consider or we can use. Whereas in new tax regime, there won't be no exemptions allowed. So which one is best basically? So if you are someone who have significant investments, various aspects for tax saving, right, then old regime will be good. But if you prefer a simple tax thing, then the new tax regime will be there. But it is better to compare both. There are so many calculators which will help us to give based on your income and your investments, which one will be good based on that. If you feel there is significant difference between these two, then you opt the one which is best. If you want a dedicated video on how to compare this, do let us know in the comment section. We are very happy to create a small video which will explain how to use these calculators and see which one is best for different individual salaries. So suppose just to give an example for now, right? I am taking Rohan again. Let's say Rohan is earning 10 years. Suppose if he opted for old regime, then he can invest like nearly 1.5 lakhs in section 80C, and in section 80D he can go up to 25,000. Also there is way to earn there is a way to claim 50,000 also, that we will discuss later. And in section 24B he can claim up to 2 lakhs on home income interest, basically home loan interest, not income, sorry for that. So if you see that for this case, basically Rohan can opt for old regime, whereas new regime is not giving this flexibility to Rohan. Now let's understand these tax deductions in depth. On a high level, we categorize them into two sections. One is tax deduction, the other one is additional tax deduction. Tax deduction moreover falls for many of us, whereas the additional tax deduction is more only for some section of the people. Once we are understanding these sections, right, then you will get to know more clarity on this one. Okay. Coming to tax deduction, we have section 80C, section 80D, and section 80E. Coming to section 80C, we can use investments like PPF, and also NSC, and there are ELSs can help us to claim up to 1.5 lakhs per a financial year. Whereas section D, it's predominantly into health insurance. So let's say you can claim up to 25,000 for a financial year for your and family. But if you take for your parents who are senior citizens, right, you can claim up to 50,000 under section 80D. When it comes to section 80E, it's more about education. Suppose if you take a loan for education, right, you can opt for what are the amount you are paying. This is up to a max of 8 years. There is no limit on this one. If you enjoyed the video so far, please like it and don't forget to subscribe to Finance Book Info for more personal insights. Let's go further. Coming to additional tax saving sections, we have section 80CCD 1B. Basically here, if you opt for NPS, that is also one way for saving tax, it will fall under 80C. But whenever you can deduct, or less you can get exemption more of 50,000 in 80CCD also. The other one is section 24B, where your home loan interest, whatever the home loan your interest you're paying for a year, up to 2 lakh rupees, you can get exemption with this one. Now let's discuss about various tax investments we can do to get advantages of investments we have spoken so far. We have ELSS, and we have PPF, and we have NPS. Let's discuss about them in detail. ELSS is basically equity linked savings scheme. They are primary, like moreover like mutuals and that mutual funds that invest primarily in equity. Basically, these funds will come up with a lock-in period of 3 years. Basically, you cannot sell before that. You need to wait for a 3 years of 3 years of waiting period. Lock-in period will be there. So this is fall under 80C. So these returns basically, if it is growing, right, this fund, you will get benefit of that also. And also they comes with a high risk because it was invested in equity. Coming to PPF, it's basically backed by government. You can consider it a long-term investment option, and also most safer one. It comes with a lock-in period of 15 years. Every month from your salary, some amount will be going over there. And once the maturity period is completed, basically this 15 years completed, the interest you earn and also the amount you get, both are like complete tax free. In a year, right, what are the amount you're keeping in PPF, you can claim up to 1.5 that you can consider a tax reduction under Section 80C that we already discussed in the previous sections. Coming to the NPS, the National Pension System, this is also one good way for reducing the tax. So you can, using this, if you pay monthly, right, you can use up to 1.5 lakhs, you can get a deduction, but additional 50,000 deduction you can claim under 80CCD 1B. This is also good way for saving tax. Also, recently government has started NPS for kids also. Maybe there is a kid account you can open until 18 years. Once they got 18 years, they can change to the national pension scheme, pension system. If you enjoyed the video so far, please like it and don't forget to subscribe Finance Booking for more personal insight. Now let's discuss what other tax benefits for a salary individuals we have. So for salary individuals, we have like home rental allowances and leave travel allowances and also standard deduction. Home rental allowances, so when you get your CTC, that portion will be there, how much HRA your the company is offering you, and also what was the amount you are paying in monthly basis. The minimum of this will be considered in HRA, that is not you are paying the tax for that. Also, leave traveling allowances is basically any expenses in travel expenses during the vacations or anything, right, within the India, that you can claim, which can be airfare or train tickets or bus fare, everything will be included in that. And coming to standard deduction, we have like 75,000 will be standard deduction for all the salaried employees. Previously it used to be 50. Now they have increased to 75,000 in the recent budget. Let's discuss some of the advanced tax saving strategies. So one thing is tax harvesting. Basically in this, we can maximize the tax liabilities of investing by strategically selling and repurchasing the same asset. If you want to know more about tax harvesting, please let us know in the comment section. We're happy to create a dedicated video. Using this, we can save a lot of money, especially in investing. If you have stocks in your portfolio, right, using this method, some amount will be reduced from the tax perspective. That we can decide in detail in that video. Please let us know in the comment section. The other one is, instead of having all the incomes or like investments on our individuals, you can consider families who are not working. You can consider you can take the plans and you can use their accounts for these investments. This will also help us in reducing the tax. I think that's the end for this video. Let's have a quick recap just to understand what are the things we have discussed so far. So we discussed about the key differences between old regime and new regime, which one we need to opt, that conditions we have discussed. And we discussed about various tax deductions we have, and also we discussed about some of the investments we can use for reducing the tax, and we discussed some of the strategies like tax harvesting and using the family's accounts for reducing the tax. That's it for this video. By following these tips, you can significantly reduce your taxable income and save more money. Always remember to plan ahead and consult a tax advisor if needed. We are attaching one tax advisor link, Tax Buddy. You can check it out if you really need. It's not mandatory thing. If you really feel you need help in tax things, you can check out the link which was mentioned in the comment section. Thanks for watching this video. If you found this video really helpful, please give it a thumbs up and share it with your friends, and don't forget to subscribe to Finance Book for more personal finance insights. See you in the next video. Thank you.